welcome back to the KPMG Africa Conversation series. We're looking at how to execute growth strategies on the African continent. Still with me, we have Bronwyn Darwin. He is the MD of Tata Africa Holdings. Henry Obi, the COO of Helios Investment Partners, is with us. Dapu Okubadeju, Africa M&A and Transactions Advisory Team, KPMG Nigeria. And Nick Matthews joins us now, Africa M&A and Transactions Advisory Team, KPMG South Africa. Thanks very much for joining us for this segment. Just want to go back and pick up on the agriculture opportunity. You said you were investigating this space. What are you specifically looking for? How will you execute this opportunity?
See, as far as I was talking specifically from the point of view of India, where there's a very large population who is vegetarian, and the nutrition comes from basically things like pulses and others. So we've been looking at, there are land issues, there's water issues, and there is abundance of both land and water, and labor is also available in Africa. So we've been looking at growing products in Africa and then exporting them, and maybe there'll be some value add within Africa after that, and then export them out of the country. So,
can I bring Nick in here? Sorry to interrupt, Roman. The opportunities that you're seeing in agriculture specifically, before Tim left, he said it was a hot spot.
Yeah,
is this what you're seeing?
I think what he also said, it's the last frontier. I mean, if you look at the M&A volumes, they have been subdued. Agriculture hasn't been a major, I would say, recipient, although there is interest in agri-processing. So I think people are starting to identify it as an area of opportunity. But as with the M&A strategy in Africa in general, part of the challenge is finding meaningful opportunities, which is why I think a company like Tata has got a good strategy in trying to build investments rather than purely M&A. And when we advise our clients, that's often one of the key risks, impediments to be able to invest in Africa.
Dap, I know you're wanting to come in here.
Just to quickly put it in proper perspective, there are two major opportunities that I see in agriculture. When you look at a place like Nigeria, 45% of our GDP, right, is contributed by agriculture. But the problem is, it's done in such a small-scale subsistence nature. So the first opportunity is large mechanized farming, on a large scale. That is one. Number two, there are significant issues with, the value addition element of it. Be it due to the problem of poor transportation, storage facilities, massive ones. Processing, for instance, I think is also a huge opportunity where you add value before you export. For instance, we produce cocoa, just like Ghana and Cote d'Ivoire, the largest producer of cocoa, but yet we export the raw beans and we import chocolate. But if we had so much value to it, so those are the areas that I see the opportunities in agriculture.
Private equity, is there interest in agriculture at this point?
As I said, the number of funds that are looking at private,
you said there were three opportunities.
There were three or four private equity funds currently launching on the process of fundraising for agri funds, and there's one that's Chaitin Capital that's just done a deal in Zambia as well. And so there are a number of private equity funds looking at that landscape. But as Dapwell said, there is opportunity for other private equity funds, more generalist African private equity funds, to look at the value chain, whether it's the processing or the storage or logistics in the agricultural sector.
You said it's about not being timid when you execute your Africa strategy. Have you had any regulatory challenges?
Not those which we could not overcome. We've not had any issues with that. As I said, we've entered the power sector. In Zambia, we're doing a power plant. It's under construction at the moment. So
So no issues on that front. Nick, can I throw forward to you? Because regulatory issues do still seem to come to the fore every time you have an Africa conversation.
Yeah, look, regulatory issues are not unique to Africa. I mean, I would suggest if you look at the banking crisis globally and some of the regulatory issues that we're facing in North America and Europe, there are huge challenges for major companies. So I think what is the issue in Africa is that the regulatory environment is underdeveloped. And that does pose risks. And what we advise our clients to do when coming into African countries is to engage with the regulators, because at that basis you can help African countries form regulations that make sense for business. And that's where some of our clients have had great success.
Dapo, let's touch now on strategies for investing in Africa, and let's start with buy or build. Which is the better opportunity there?
Yeah, I mean, when you look at Africa, you ain't going to see so many ready-made, large-scale companies, right? So what you've got to do from a strategic long-term perspective will be to actually look for spots of opportunities where you buy and build. That is to say, you adopt a roll-up strategy where you create that scale yourself. You know, we've seen that in so many companies. I mean, for instance, MTN was in Nigeria in, I think it was in 1991, 1992, with virtually, 500,000 subscribers. Today, MTN is the largest mobile operator in Nigeria with about 40 to 45 million subscribers. So you've got to look for opportunities and do a buy and build, because if you're going to wait for ready-made large-scale conglomerates, it's going to either be expensive or they're just not going to be there.
Nick, you'd like to add?
I can just add a practical example to that. I mean, I've worked with Dapo in trying to help some of our retail clients enter into some of the African markets. And what we've learned really is that although it is undeniably a huge market, the formal grocery retail market is completely undeveloped. So that's a very good example of where there's no data market there, but you're just not going to be able to buy a business. You have to come in with a strategy where you integrate with your supply chain, you find locations, and if businesses can do that successfully, they'll be very profitable.
If we can take this theme a little bit further in the private equity space.
Yeah, I mean, we work on both strategies, new business formations, which essentially means startups in very fast-growing sectors. You can start up a business and where you see the opportunities. And then the buy and build strategy. About 3 years ago, we bought the largest outdoor advertising company in South Africa. We renamed it Continental Outdoor. It has a footprint in 14 different countries in Africa, and we're expanding to West Africa. So, that's a good example of a buy and build strategy. And then we also invest in public, we do structured investments in public quoted equities. So, for example, Equity Bank, we put some capital into Equity Bank, which is one of the fastest growing banks in Africa, based in Kenya, and they've expanded to Uganda, South Sudan, and Rwanda.
How do you weigh up opportunities in Africa versus opportunities in other emerging markets? So Latin America, for instance, your home territory, India, China.
Well, as a group, yes, we are looking at both, but I think the main emphasis is in Africa, and so I think capital requirements, we have to compete for that. But I think Africa has been winning because I think there's more potential. We feel we are proximate to Africa. We may not be next door neighbors, but we are next door neighbors virtually with Africa. So we find that helps us, and also our background, our historical ties with Africa from India have been very strong, and that has helped. And I agree with the buy and build. There's not much available. In all these years, all we've managed to buy is Magadi soda ash in Kenya, and we've not been able to really buy. And so you've got to build businesses in Africa. So it's a big opportunity.
We're obviously cognizant of the uncertainty in the global economic environment at the moment, and merger and acquisition activity globally is subdued. Perhaps we just go back to looking at M&A activity on the African continent as a whole. Are you seeing the same trends that we're seeing globally, or is there better traction?
We are seeing those same trends. I mean, there's no doubt about it that global multinationals have got a lot of cash on their balance sheet. They're very apprehensive about making investments, risk-averse given the global environment. And in Africa as well, we have seen subdued activity, even as most recently as the first quarter of 2012. So I think what we have seen, though, is huge investment in terms of direct foreign investment in terms of capital expenditure. We've seen, for example, SAB Miller investing 1.5 billion in rolling out capacity, and this is really to address that consumer market we've talked about. So I've no doubt there's investment, but sometimes it's not coming through your traditional M&A avenues.
Yeah, just to add quickly to that one as well, there's a twist to the reporting of investments in Africa. And the twist is driven largely by, number one, the informal sector. Number two is the investments that are currently being made by existing companies in Africa. For instance, you see a lot of them increasing capacity, largely in consumer markets, for instance. And also, you've also seen a situation where we're seeing the emergence of local conglomerates coming up, right? And a lot of those local conglomerates are now able to access debt capital funding from abroad. All of those are not captured in the figures that are being reported. So when you put all that together, there's still a lot of activity going on, but due to those factors, a lot of it are not captured, and it just appears that there's a downward trend in investments.
Nick, you wanting to add before we go to questions?
Just the other noticeable trend is, whereas South Africa was a predominant player, I mean, we're experiencing more and more global multinationals investing. So that type of M&A inquiries we're seeing more and more of, particularly from India, Japan, America. I mean, the Walmart Massmart transaction is a classic example of making an investment. That's a buy to build into Africa. So those are the trends we're seeing, as opposed to your traditional South African type M&A.
Just a reminder to our international audience joining us via that live webcast, you can send through your questions. We'll be fielding them in this section of the program. And if I could kick off with one for Raman, it's James Kula. He says, as investors, do you see an opportunity in quality healthcare for the booming middle class?
Well, we do see an opportunity, so that's why what we have ourselves got into is distribution of pharmaceuticals, not in South Africa, but rest of Africa, almost I think 5-6 countries, because we see you need affordable healthcare products, and that is where I think we've stepped in to some extent. It is something which has a long gestation period, because you got to register pharmaceuticals. Manufacture has not been an option, again due to the scale of these countries. If something combines together, but distribution is something which we've looked at.
I'm going to throw this one out there, and you can leap for it if you want. It's Dimitri Georgopoulos, and he's saying that the regulatory environment when it comes to renewable energy, how developed is it, and which countries are the most advanced? Any takers on this one? I can see some hospital passes are going to happen any moment, gentlemen.
Well, I mean, it's more developed in South Africa than the rest of Africa, and that's because a lot of Africa currently doesn't have a reliable form of energy input for their electricity system. So once that develops, then they will turn to renewables as a alternative source of energy.
Let's look at this one, Dapo, specifically for you. It is Tapas Ewas, and he's saying, are investments secure in Nigeria?
Yeah, I mean, that's an interesting question. Are investments secured in Nigeria? Obviously, my answer will be that yes, they are secured in Nigeria. And the reason for that is that, just take a look at the several, companies that have been investing in Nigeria, and they're still there. And you see the quantum leap in the growth that they are reporting. There's so many companies in the consumer goods sector, for instance. Heineken, Guinness, Cadbury, Nestle. There's so many of them there, and they've been there for ages, and they keep investing and having the capacity. So I think that's the best way to take a look at that from a private sector perspective. Obviously, from a public sector perspective, the emerging trend is what we call the public-private partnerships. Obviously, there's a very clear regulatory territory in that space, and we're still learning as well. So.
Roman, it looks as though you'd like to add to that, whether investments are secure in Nigeria or not.
Yeah, we've just been a recent entrant in Nigeria about 4 years back. And there was always this scare about, that's why and one fine day I said, how can we miss such a big market? We've got to be there. We went in, and let me tell you, we are so happy with it. Because there's been, in fact, it's one country where business is allowed to operate on its own. Yeah. Because it's like a mini India, we see it. Not mini, I would say, it's larger than a mini. It's a part of India. And we see that there's no really the interference from any of the regulatory bodies or the government, and they allow you to.
And I'm sure everybody well knows the MTN story, so, I mean, they've been quite happy with their investment in Nigeria to date.
Absolutely. I think that's a very good case study to throw forward when it comes to the Africa story. Nick, a question from Keith Harrison in the UK. He says, we've seen recent indigenization of mines in Zimbabwe. How does the panel perceive the protection of mining majors' interests in Africa? And it's important because we haven't actually touched on mining per se. We've touched on resources.
Yeah, look, mining has and will continue to be a very emotive issue. And we've seen that in Zimbabwe, indigenization, and we've also seen BEE, Black Economic Empowerment, in South Africa, which also requires participation by previously disadvantaged groups. So when it comes to resources, I think, as I said earlier, it's important. The important thing is to engage. And I think, as Mr. Raman said earlier on, if you're coming into a country and dedicated as a long-term investor, I think, and you're willing to work with the regulators, I think the continent still holds great opportunities, even in the mining space.
Question from Sarah Madison in the US saying, we've looked at transaction trends where M&A volumes are low for Africa. How is it possible to access opportunities if there are insufficient deals to be done? Any takers on that? Dapper, you're looking at me with enthusiasm.
Typically, Africa, with the exception of South Africa, it's not really a major market. A lot of the mergers that you've seen in Africa, they are largely regulatory driven, right? What we see is that the growth in the investment opportunities in these deals are largely foreign investments. And there's still so many opportunities in that space. But in terms of mergers, you aren't going to see so many commercial-driven mergers, except they're kind of regulatory-driven, largely.
I'm writing and listening at the same time, so this is a new method of multitasking. And the question I may have to have repeated with regard to Jonathan Kruger, he's saying that the locally listed African sector doesn't have a lot of resource and agri companies. Do you see these sectors looking to the listed environment?
I think I can answer that one. I mean, traditionally we found a great appetite in, for example, Canada to raise capital for the junior miners, for example. So, but the fact of the matter is a lot of those companies are operating on the African continent. So, I mean, that's an example of where the capital is not being sourced in Africa, but it's certainly being, to a large extent, deployed in Africa. So I would say that the capital may not be available in that sector locally, but it's certainly being attracted here.
I'm going to open up to the floor here in Johannesburg and whether we've got any burning questions from our audience present. We do have roving mics available that will be deployed. All you need to do is signal, put your hand up, and we'll deploy a mic in your direction. We'll open back to the floor in just a moment. Coming back to the global picture and the risks that we're seeing with the global story. Obviously, Africa is going to be impacted by that global story. Would it be fair to say that we're completely at the mercy of the global stage?
Not so much, because as I said, you've got South Africa, one, we treat that, and you've got rest of Africa. We've not seen the rest of Africa getting affected. And so there's a consumer market emerging locally, and that also. So it's not always what has to come from overseas. Yes, the resources area may be affected, but there, we've been thinking of that, and we feel that if you do addition along the value chain in the resources sector, that's something which is missing in Africa. And
I'd like to take a question from the floor.
Yes, look, there's a lot of discussion that South Africa should be the financial center of Africa, that we should be providing into the continent. Do you see, we have large banks, we have all of that. How do you think that South Africa is unique in that role? And how can it play a role in being a financial center? That would be a simple question.
Who would like to field? Nick?
Maybe I can answer that. The JSE, if I can just use that as an example, but I think the same would apply to our banking sector, is one of the best regulated markets, the JSE. Minority protection rights in South Africa are ranked, I think, third in the world globally in terms of the World Economic Forum research. Our banks are very well capitalized and very well regulated. So I do think there is some merit in that. However, I think South Africans need to be careful not to impose their will in terms on some of the other African countries. And I think it needs to be more of a collaborative approach in trying to develop our capital markets.
We've got another question from the floor. Go ahead, sir.
The opportunities in Nigeria cannot be doubted, but there is frequently outbursts like the threat to the MTN operation by this militant group in Nigeria last week. Do you think it's just a threat, or the response of the two governments is adequate, or is this a real threat to business?
Okay, thank you very much for that. Yes, there's been quite a lot of issues with terrorist groups and business disruptions in some areas. But when you look at the trend of what we're seeing, is the first one is that during the in the recent past, it was largely the Niger Delta areas, and everybody knows why that was so. And that was about 3-4 years ago, and there was even a significant disruption to the production of oil in Nigeria, but that's been taken care of now to a large extent because government actually engaged right with those people. Now we look at the terrorism issue. A lot of people have said it's a religious crisis and all that. But I would say that yes, there's a religious crisis, but there's a lot of political undertone to what is going on with respect to the Boko Haram, terrorist attacks. And when you also take a look at it very deeply as well, you will see that it is a particular region that is actually significantly affected. And in fact, there was a report recently by one of the investment banks that when you look at the total impact from a GDP perspective of all of this crisis, it's actually just less than 5% of it. Nigeria is a huge country. People even get afraid, your country is burning, should I come in and all that? And, we're having fun in Lagos or in the Southwest, or in most other parts of the country. So there's some political undertone to it, but is government addressing it well? There's always room for improvement. We've never been used to this kind of issues or crisis. So I think you've also got to be very careful, in addressing issues of politics and religion, So I think, there's a lot of engagement that they're doing right now. They're looking at it from a different approach. And I'm sure that very, very soon, in the foreseeable future, this crisis will be largely resolved, if not completely resolved.
We've got another question from the floor here in Johannesburg.
I just have two quick questions. The one is about a single currency for Africa. Do you think you'd like to see a single currency for Africa, and will it facilitate investment continentally? The second thing is about the tax regime. What can you say about the tax regime in this country? Are they conducive to investment in Africa? If African government were to receive the revenues that due to them, we could see better roads in Africa.
Dapo, you've got the mic in hand.
Let me quickly try and respond to that. In terms of uniform currency, and I think the very recent lesson is just to take a look at Europe, right? I'm not sure that Africa, with the multi-jurisdiction, very diverse cultures, different languages, would want to adopt that approach. Even adopting a regional economic bloc is tough in itself, than thinking of a unified African currency. Secondly, in terms of tax regime, there was a question about when you compare Africa with other high-growth markets. One of the things that I've seen from my own financial advisory M&A experience is that most African governments, they actually like to engage. We had a recent example. They're a plethora of incentives, tax waivers, tax holidays. In fact, there was a case that we were advising on recently. Tax holidays, used to be the exclusive preserve of new ventures in Nigeria, right? 5-year tax holidays. But we acted for some of our clients that are actually making new investments. They are existing companies, but they are making new investments. we were able to, make a solid, successful case of actually granting tax holidays on those new investments. It just shows you how far a lot of these governments will go in encouraging investment in Africa.
And thanks very much for that. I just want to take another question coming in from our international viewer. This is the last question we're going to be taking in the session. James Milner saying that poorly developed infrastructure remains a significant challenge, especially when it comes to power and transport. How can companies reduce the risks of rising costs caused by exposure to poor infrastructure? Raman, I think on your side, a quick answer on this front.
Well, I really don't have a single answer to this. I think each business it depends on the business you are doing. Yes, infrastructure is not too good, and that's why I see that as an opportunity for other companies to come in and improve that. But I think our businesses have not really got affected because primarily the large investments have been in South Africa, where the infrastructure is first world in many respects. The rest of Africa, I would say, they are improving their infrastructure, their roads being built, and we see the airports are being improved. So it's a question of where they are today and what will happen in the next 10 years. We see an improvement. We are not seeing it going down. And so that's a positive thing which you should see to invest.
And on that positive note, I think it draws us to a conclusion. Gentlemen, thank you very much for your time and joining us for the KPMG Africa Conversation series. Thank you very much to our live audience here in Johannesburg, and of course also to our live international audience that joined us via webcast. Thank you very much, and thank you all for joining us for the KPMG Africa Conversation series.